Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video is for Thursday, September 6th, 2012. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. So we have an epic short squeeze on our hands today, folks. The markets are soaring. Dow is up 220 points, NASDAQ up 63, S&P's up about 27, basically 1.7% to 2% across the board. And again, if you look at the reasoning behind this, it's very interesting. Let me just explain it to you. First off, you had Draghi's comments. We all knew Draghi's comments were going to come out this morning. In fact, yesterday in the technical analysis video, I said, guys, the chart setup is bullish for today. Look for a one-day pop on the markets. Now, did I think we were going to get 220 points out of the Dow? No, not at all. But again, if you look at the chart from yesterday and what you saw here, you saw this from Monday, or I should say Tuesday, a big move up, and then yesterday was all inside bar action. That was telling us that you would probably get a pop today. Now, again, I didn't think we'd get this much of a move up. This is a very, very strong move, but it doesn't really not make sense. It actually does make sense for a couple reasons, which I want to talk about. Number one, the Draghi announcement was normal. It was everything the market expected. So many people would say, well, why is the market rallying so much on a Draghi announcement that everyone expected? The basic news was Draghi's going to buy, the ECB's going to buy, debt from these countries like Spain and Italy and France, well, not necessarily France, maybe eventually France, but, Greece, Portugal, and so forth. But the key today was you opened higher on that news right here. So why did you continue to soar? Well, the basic analysis shows us there was a short squeeze triggered on the first candle of the day. All right, you got a major buy program coming in, which triggered shorts covering. A lot of people obviously had accumulated shorts. I even have some shorts out there, although only about 30 to 35% of my portfolio is short. But the shorting aspect, a lot of people had loaded the boat, and they're getting squeezed out. So after the buy program hit, which I think was Federal Reserve, government related, hit the markets, you had a lot of shorts covering, which gave you the rest of the move up. Now the markets have stalled out. Right here at the 143.5, 143.75 level, the markets have stalled out. We'll see if they even come back in a little bit later this afternoon. But bottom line is, the resulting move was mostly a short squeeze on people saying, all right, we saw a move up. I got to move out of my shorts for now. The markets are moving above the 2012 52-week highs. In fact, we're at a 4-year high. Now, the fact that we're at a 4-year high on the markets is not inconsequential to what else is going on. Now, one of the reasons why I think a buy program hit today is simply because President Obama is set to speak tonight to the Democratic National Convention, the DNC. All right, now think about this, folks. Think about this good. You have Obama, who's trying to get reelected, and he's coming into a speech tonight where people are questioning, are his policies working? Do you think he wanted to come in tonight with a market that was down or flat or stalling or maybe even down significantly? Absolutely not. Would he have preferred a market where he could come into that speech tonight and say, hey guys, look at the market. I took over 4 years ago. We are at 4-year highs on the stock market. Is it easier for him to come in when markets rally 200 plus points on the Dow and talk about how great his policies are? Absolutely. So I think we have to kind of take it with a grain of salt. You're getting a great rally today. Volume's even decent. We've done about 100 million today. But is it really natural occurrences? Is the economy really that good? Is this bond buying purchase program really that significant from the ECB? Because it's not. QE3 eventually we're going to get. We all know that. So what's the real catalyst here? What changed? And the answer is simply, it's a rally partially based off relief of the Draghi announcement, which started it. But the short squeeze that pushed it is based on buy programs triggered into the Obama speech tonight. Very cool stuff, actually, if you think about it. Now, the question is, will this rally last? I think that's what we all want to know. And the answer is, I don't believe so. All right, again, fundamentally, is there anything behind it? Even technically, is there anything behind it? And the answer is no. There's not much technically behind it. You had a little bit of choppy consolidation over the last couple weeks or so, which obviously gives us a little bit of upside here, which is what we're getting today. But is there that much more upside? Are we going to see the spiders go to 150, 160, 170, 180? And the answer is, at least based on technicals and fundamentals, the answer is no. All right, now let me go to the daily chart. I want to show you this. So you're piercing this upper level here. But what I want to show you is if you zoom out, and I have to go back quite a bit, you're coming into some very, very key levels here. The upper level is at 145 on the spider, so we're only about $1.50 away from that master level of 145. And 145 is a key gap fill going back to 2007. So watch that. That's actually a very, very important point of interest at this station. All right, so right away, this market is telling me, yeah, maybe you float up tomorrow after we get the jobs data. My guess is the jobs data will be okay because, again, Obama wants these numbers to be good now going into the election. But you still have a lot of hot air in the markets. And again, until we see fundamental changing, you have to really think about the market in terms of reality. Okay? So that's what I'm seeing right now, folks. And again, there's plenty of stocks rallying today. Just going through the list, JPM's up nicely. Amazon's announcing a new Kindle. Apple's even having an okay day, although Apple's kind of lagging the rest of the market. Google's up 17, Apple's only up $6 on the day, and Baidu's barely positive. But Chevron and Exxon are having good days. I mean, the key leaders in the Dow and the S&P are doing relatively well. All right, I'm not going to cover too much more because I got to get back to trading. Trading, obviously, in this environment where you have big moves is always good. You're going to hit major resistances and get pullbacks and so forth, and that's what we want to do. So I'll be profiting in the intraday stock chat with my members this afternoon, and we encourage you to come join the intraday stock chat if you're a day trader, or the research center if you're a swing trader or an investor. That's where it is. There's a 7-day free trial, and I'll talk to you soon. Take care.